And welcome to the NobleCon Conference presentation on Golden Predator. I'm William Sheriff, the Executive Chairman, Golden Predator, and I'll take a few minutes to run you through the presentation and then open it up for questions. The usual disclaimer and an overview of Brewery Creek. Brewery Creek's our sole focus. We're focused on restarting the Brewery Creek mine. It operated between 1996-2002. Producing 280,000 ounces of gold back when the price of gold was between 250 and 400. It closed due to low gold prices at the 250 level, not due to lack of resources, although we've, over the course of the last 10 years, increased the resources from about 100,000 to about 1.2 million ounces of oxide mineralization or leachable mineralization. It is a brownfield site. We're still under license from the original operations. We've got a track record of growing resources, got a very big commitment to ESG standards, and have a lot of upside potential on this project. We've only really looked at about 15% of the 180 square kilometer property. And we're in a reasonable jurisdiction. Kind of taking a look at the actual mineral resource here. You can see it in the bottom. I'm going to jump down to that. We've got indicated of 789,000 ounces at a really good grade of 1.11, which for an open pit heap leach is a very good grade these days. And then another almost 500,000 ounces of inferred. So altogether about 1.2 million. In addition, we have a large 820,000 ounce sulfide resource for down the road. Obviously, it's not economic under current conditions. We do have a restart and integrated feasibility study underway. It was supposed to be done by the middle of February. We do not have all of our assays back from the drill program that we finished, several months ago. We will be putting out a news release hopefully later this week, if not early next week, with the first batch of those drill results. But without those coming in, it's I don't see how we'd possibly make the middle of February deadline on the feasibility. So probably in March. We are getting close to, at least we think we can see the visibility on getting all those drill results back. So most of the drilling this year, or in 2020, was done to hook up the, what we call the KEG resource, or the KEG pit design into the Lucky and extend that into one. And I'll show you that a bit later. A little bit of information about the stock, right at $40 million market cap Canadian, 172 million outstanding. Got some really great shareholders who have been with us a long time. Janet and myself, obviously, are significant shareholders. Eric Sprott and Pat DiCapo in Toronto. CIBC Private Wealth, also in Toronto, holds about 20% of the stock. And altogether, these five account for about 50%. Just a couple of folks on the board. Obviously, myself, Bill Harris was CEO of Hoist Fibers, part of the Celanese group, joined the group a number of years ago in a uranium company that we had that went to the New York Stock Exchange and needed Sarbanes-Oxley. So he's a great audit chair. Stefan Spears joins us. He's a vice president of McEwen Mining and is a dynamic part of our board. Tony Lesiak is now with Star Royalties, certainly accomplished in the financial field. Rich Goldfarb, globally recognized expert on gold deposits, especially orogenic gold deposits. And Brad Thiel, mining engineer with a number of years of experience, including moving the Meadowbank mine into production in the very difficult Arctic conditions. Management team, you're probably familiar with some of these. Mike Myslowski is our chief operating officer. Janet is the chief executive officer. Jim Hesketh's our lead engineer. And Jeff Carey's project geologist, been with us for the better part of 10 years here, so he's definitely a big help. We have a very strong commitment to the First Nations, and this is a real passion of Janet's and mine as well. And everything we do is designed to integrate the needs and desires of the First Nations into a productive future moving forward. Several things we've done: Elders in Residence, Brewery Creek Bees. The Elders in Residence was an award-winning program where we actually invited members of the community to live on site in the camp with us on a rotating schedule. We learn from them, they learn from us. Very, very successful. And we've got a socioeconomic accord with the Trandekwichen at the Brewery Creek mine and a joint technical advisory committee. Also the Yukon Mint featuring Aboriginal or Indigenous peoples art on the coins has been quite a success, and we're into our third or fourth year of that now. want to talk mostly about Brewery Creek. You can see a picture of it, also another picture of it in the background of my headshot there. The ponds are still there. The buildings that you see in the foreground have been removed. That was the old ADR plant. That will have to be reconstructed. The foundations are in good shape. Leach pad is still usable. We've done considerable testing on that. Truck shop is still there. The roads infrastructure is still there. So we benefit from a fairly good infrastructure. Here's a location map. You can see we're just east of Dawson City, all-weather roads, and we have operated year-round here for a number of years. The actual mine site, you can see here, the loaded cells 1 through 7. This is a part of the pad that's been used, at least partially used. And the unbuilt cells that are permitted 8, 9, and 10 for 6 million tons capacity on the north end. And there's still some room left on the south end as well. Sorry about that. It's jumping ahead of itself. So here is a view of the actual resources. The green ones are within the current permit that expires late this year. We're currently in the process of amending that to try and extend it. The ones in yellow are new resources that we've developed that are not included in the permit, even if they're within the rectangular, irregular rectangular shape that is the permit area. The yellow resources will have to be added to our resource base through amendments. And then, of course, you see the striped or hatched areas. These are new deposits that we've found that don't have enough drilling on them to really have a developed resource yet, but certainly just require a bit more drilling. They're open-ended, in other words. The drilling last year, I'd mentioned, focused on connecting what you see here in the red corridor, which our last 2019 43-101 did tie into one single ore body that's modeled as a single pit. We're really in a major effort this last drilling program to connect it to the east-northeast to the Lucky, the last green dot there. Obviously, the more ore you can get into a single pit, the better your operating efficiencies. And that's going to go right into the feasibility that will feature basically all of the KEG resource, or the area that's in that red parallel track, plus the Lucky. And I think I've got a 3D, if everything works here, I've got a 3D model. I can show you a little video clip of this. We'll see if we can get that started here. And this will fly you through the area. You're looking at the heap leach pad. You're looking up trend east-northeast at the various pits. You see these access road coming in and the disturbances. We've basically got 3 parallel thrust faults dipping off to the right or to the south. The ones in blue there are along the main reserve trend or the center thrust. And these are the areas that we are attempting to unify into a single pit, everything from Lucky down to Lower Fosters. And we've had very good success doing so. You can see the yellow and orange is the resource from the last resource report, and goes considerably below and beyond those blue pits from previous operations. And as this spins around a bit, you'll be able to see some drilling right here in the lower midsection. Those drill holes are the new camp zone. That's a new discovery that was made, not discovery, but a new expansion and first resource done from the 2019 drilling reported in 2020. And then you'll see us move uptrend. By the way, the Moosehead, North Slope, et cetera, you see on the upper left-hand are the northern thrust dipping to the south. And as we get into the Lucky, Golden, Kokanee area, you'll see an awful lot of drill holes there. These are the holes that connected, and also down at Foster's, these are the holes that connected and provided the basis for the KEG pit shell, unifying all these deposits into a single pit shell. This was possible due to a higher gold price, lower cutoffs, and a lot of infill drilling. As you come up this last program, we didn't quite have enough drilling done between Lucky and the KEG pit. You can see it's continuous mineralization, but it just wasn't dense enough drilling to be able to carry a resource on it. So we scrambled late in the summer, early fall of this past year, 2020, and did a program of about 35 holes, just all right in that area between the KEG. There you can see where the infill drilling is, between the KEG and the Lucky. And the first batch of those holes will be coming out, as I say, either late this week or early next week, followed hopefully shortly with the remainder of those. Ultimately, we can continue this pit by drilling a bit more. We haven't done it yet, but between Bohemian Schooner and Lucky. And we end up with about a 5-kilometer long linear pit. And here again, the more we can tie into a single pit, the better on operational expenses, et cetera. You can kind of see a diamond shaped, a dark diamond shape there between the drill holes. That's where we did our drilling in late 2020, trying to tie those in. And here's a vertical view where you can see the red drill hole collars from or areas that we were drilling to get the latest resource. The resource that is stated currently that went into the feasibility study, plus the new drill holes, indicated here again the keg pit being the biggest one. It's got a little over 300,000 ounces in it, 360,000 ounces. The areas that are permitted currently are the Keg, Lucky, Moosehead, and Pacific Blue. So all told in the permitted area, a little over 500, 600,000 ounces. But here again, the Keg pit is the starter pit that we'll look to begin operations on. And hopefully when we combine it and the Lucky pit, assuming we're successful with the drilling, and we think we have been, then that'll give us a much bigger starting, about 500,000 ounce pit to start with. These are the resources that are not permitted, but it shows you here again our upside future for growth. And through amending, these will come into the permit area. Here again, the amendment process up in the Yukon will involve full assessment on these new amendments. So it'll take a couple of years to bring any of these into the existing permit. But there's most of these are open-ended, so they will continue to grow. A good time to mention that last time we did serious exploration drilling was about 2013, and at that time we were still hitting 75% of our exploration holes. So and then we converted the effort to infill drilling and developing resources, but still lots of blue sky. And hopefully these geologic models I'm going to show you will illustrate that somewhat. Here's a geologic structural framework. You can see the 3 thrust faults dipping to the south with the arrows pointing down dip. And then you see the resource areas again in green are permitted, yellow are established resources but not permitted yet, and then the hatched areas are developing resources. Also, we see a big intrusive areas to the south where the plus marks are. These are very favorable targets for porphyry mineralization. Here's the soil geochemistry. I think you can see pretty quickly that these soil geochem anomalies for gold line up right over those structures pretty well. Almost all of the soil anomalies to the northeast have not got more than a hole or 2 in them, so a lot more drilling to be done there. Sorry again, jumping ahead. But we've got substantial, you can see how good a tracking it is for the resources. So we've got some really good exploration ahead of us, but choose to do that hopefully after we're into production and doing it out of cash flow instead of having to come back to the shareholders for money all the time. Speaking of which, I forgot to mention, we've got over $7 million in the bank and have been funding most of our operations through an option writing program on covered calls against a Seabridge share position that we received for the sale of our 3 ACES project about a year ago. It was a very good move for us, and been able to be largely self-funded out of the return on that investment. Continue to look forward to that. So what to look forward to, obviously the drill results from the last drilling. The bankable feasibility study that's in progress. Here again, it's still in Q1, but we were expecting it in February. I think realistically, you got to look at March now with the delay in the drill results. Obviously, that will come with an updated mineral resource estimate integrating the new drilling. And then we'll be looking at a production decision and financing somewhere down the road for Brewery Creek this year. But of course, the first thing will be getting that permit extended. Other assets, I just want to touch briefly on Group 11. This is a subsidiary we own 20% of ownership in. It's a private company that focuses on in situ technology to extract metals other than uranium from the subsurface without excavation. In situ, just as a very brief primer, is an established producer in uranium, to a lesser degree in copper. We think we can advance that to a broader scale, spectrum of metals using benign solutions that are environmentally friendly. A lot of research work to go. It won't be funded by us. It's privately funded. As that happens, our interest in it will decrease, obviously, through dilution. But it could be revolutionary technology in the mining industry, and we're pretty excited. Some of the original pioneers on in situ uranium are the ones that have actually come up and are really driving the research on this. And I think at that point, I will be glad to take any questions.
Thank you, Bill. I'm Mark Reichman, the Senior Research Analyst who covers the metals and mining sector at Noble Capital Markets. I'd like to remind our viewers, if you have a question, please click on the icon in the bottom right-hand corner of your screen and type in your question. So the first question relates to Group 11, and it's a two-part question. First, are there any new updates with Group 11? Any chance you would consider using in situ with EnviroLeach fluids instead of cyanide?
Well, that's what we're going to be trying to do, but it's, that development is, frankly, years off. We plan to, we've got a few properties in the Group 11 house at the moment. We're looking at another one. We'll pick the best one sometime here within the next couple of months and begin permitting it to do some core drilling, hopefully by the end of summer, first part of the fall. That will allow us to start bench scale testing of the material using the EnviroLeach formula on drill core in the laboratory setting. Assuming that that's successful, we'll move on to various size fraction column leach tests with large scale core coming out of PQ drilling, oversized core, about 4-inch diameter. And here again, this will give us an idea if we're getting any permeability in the crushed or fractured rock. Now we'll be mimicking what we do in called induced permeability, which basically you go into a gold deposit, it's silicified, so you aren't going to be able to move fluids through it except along fractures. Our technique will involve drilling holes relatively close spaced, and through coordinated, computerized, synchronized micro explosions, inducing permeability to that silicified rock. The theory being, of course, the rock will break along the same fractures that deposited the gold. You can rebelize it now to a set size fraction, all really amazing advances in blasting over the last decade. And then you should be able to induce the permeability. And then in about the third year, we'll be looking at our first field test of actual in situ 5-spot development, where we inject the fluids and recover them from actual in the field testing. But we want to go slow, make sure we get it all done right. We think we can do it. All the pieces of the puzzle are there. We just have to put it together.
I think the next question you touched on, but how onerous or easy is the permitting process to enlarge the permitted area? And in terms of the production decisions, which permits will have an influence on your production decision?
Well, the key one is extending the current permitting. Currently, we're permitted to mine 4 million tons a year out of those areas that were designated in green. These are the old Viceroy mining permits that are still valid. We propose to continue that and do some reclamation at the same time as we deplete the resource. So that's the key thing, is the extension of that existing permit. That will give us a runway of over 5 years of production, which matches about the capacity on the leach pad. We've got at least 2 or 3 years of capacity on the leach pad. Plus, we'll be doing some reprocessing of the higher grade portions of that leach pad. Neglected to mention earlier, the leach pad that's out there was run of mine ore, so it was never crushed. And therefore, it runs about 0.7 grams per ton, which is a typical heap leach grade. And by crushing it and restacking it, we can get a significant portion, about half of that gold out. So we'll be doing that, sending some of the existing pad to waste, and that way utilizing the existing leach pad. As for the amendments, we've got a 5-year runway, like I say, under the existing mine plan, assuming we can get that extension, which is very promising at this point. Certainly in discussions to get that done with the First Nation and the government. But those amendments, like I say, they could take 2 years, maybe 3 years each. Permitting is not the easiest in the Yukon. It's a set forward, a laid out process, and somewhat methodical. But it's like permitting anywhere. There's challenges to it. So the key one for us, though, is that first one, the extension, which gives us a 5-year runway to any amendments.
And how long is the construction period for Brewery Creek? And when realistically would you expect to see the mine go into production?
Well, if we can get a fast decision on the extension of those permits and get financing, which I think will be readily available in this market, seems to be quite a lot of debt available with low coupons since there's such a struggle for return these days. Then we could get on it. The most aggressive would be to get on it and construct this summer. I think realistically, that's a real optimal viewpoint. It's probably the next summer for construction. But the entire thing can be built easily in a 12-month period. You just got to time it right such that certain activities where you're dealing with breaking ground and plumbing and electric and utility lines, et cetera, have to be done in the summer, as well as relining the existing ponds. That has to be done in the summer. So as long as you're coordinated, you can get it all done in one season.
Well, so realizing that you still have assay results outstanding, how are the elements of the bankable feasibility study coming along, referencing both the CAPS-Cassiday study, which deals with the reprocessing of the material on the leach pad, versus the Tetra Tech study?
Right. Well, so far we've gotten into the mine design, the pit designs. Here again, they're at a bit of a standing still point until they can integrate those last drill holes.
Yeah.
The western end of the pit's not going to change. The eastern end may change considerably. So, much of the work's been done, but we've still got to get in and remodel at least the eastern extent, if not the entire model, but certainly the eastern extent of that model, to put that into the mine planning, the design of the pits, et cetera. And of course, column leach tests are being run at the same time, because we're trying to look at one of the things we discovered on the Kappas work on the heap was that 3/4 inch crush actually got slightly better recovery than 3/8 inch crush. Only marginally better, but still the fact is you have to crush it less, which is less cost to crush. And it also has other parameters as how high you can stack the ore with the coarser crush and those sort of things. So those studies are all well advanced, but here again, they're waiting on data to finish half of the project, basically the east half. So, I think pretty clearly it'll put us into March.
Well, Bill, based on a parallel track, say like M&A versus taking the project into production yourself, how do you see each side evolving and kind of in what form? Do you have, a preference at this point? Especially when considering financing seems to be available at relatively attractive rates, or just interested in your thoughts there?
Well, the board doesn't have offers on the table, so, we certainly are planning on putting it into production. May very well involve a partner to get there, but we're certainly looking to put it into production. We've brought on the engineering staff. We've staffed the key top level positions in terms of moving it forward. Obviously, it'd be a very big staffing up process, towards almost 100 people to actually put it into production, and more than that during the build out.
Mm-hmm.
So, it's not an easy feat, but we've got people that have done it before that are running it. Jim Hesketh's run a number of mines throughout the world. So, we think we're in good hands should we end up going that route. I think a lot of it will hinge on that feasibility study, and if it comes out with sterling numbers, I think we'll have the phone ringing a bit. And if it comes out with somewhat less sterling numbers, then maybe not as much interest. But clearly, it's a viable deposit, and in current gold market, there aren't too many 1 gram open pit heap leach deposits. So, even with being so far north, it should provide a very attractive return.
Do you have a data room open?
We maintain a data room all the time, just for various people and various aspects of the study, et cetera. And we've had a number of potential financiers that want to keep track of that, so we've signed NDAs or CAs with them.
I see. Is there any more you can share in terms of when you talk about bringing in a partner?
Well, it's just one of the three options. Really, it's just one of the three options. We can either proceed ourselves, bring in a partner, or sell it outright. Clearly, we're prepared to put it into production ourselves. We think there's excellent growth potential once you start that revenue stream with the other targets and expanding the other resources that'll have to be amended here. it's sort of the long way to make a 1 million ounce deposit. Start with a 500,000 and bring in the other resources through permitting, but it's not like we have to look for the ore. We've established that, so it's simply a permitting exercise.
But, the company's done a great job, in terms of, social license and working with the indigenous groups and working, with the different stakeholders in terms of the permitting. Could you maybe just elaborate a little bit on the socioeconomic accord?
Well, I can, and in fact, it's being looked at for a little renewal of some of the terms in there. Most of those terms date from, the 80s, and we think we can be a bit more proactive on some of those, so we're in discussions now on that front. But it certainly provides for direct economic benefits to the Trondheim in terms of the usual benefits of job and contributions to education and health and that sort of thing. But moreover, it provides for net profits interest in the actual operation. And while it's a small net profits interest, it is a participating interest. So it's something that really aligns our interest with the First Nations. And I think that, like I say, we'll be looking to amend that and do even a little bit better arrangement for them. The project certainly can handle that. Not even a burden; it's actually an asset to have them aligned with us. We've always considered the First Nation a partner with a small p. We aren't going anywhere without them, and we're in their backyard. They've got to want this project, and they do. And so we think it's only fair and equitable that they receive some compensation for that, above and beyond the typical jobs in the gazebo in the park, which is, really not much. So we want to make sure that, that they're happy and really enjoy having the mine there and benefit from it for generations to come.
So then the kind of the near-term items to look for would be the assay results, and then the bankable feasibility study in March, but there probably won't be too much more released in terms of the component parts ahead of that. Is there anything else?
No, I think really through March, you've got three main things. We'll have a couple of drill result press releases, the first batch coming soon, like I say, this week or early next. And then hopefully within a week or 10 days, we'll get the last of those, maybe 2 weeks. I don't know because we don't have them all yet, but get that in short order, and then look for that feasibility study sometime in March. And we're still being told it's going to be middle of February, but it's just not going to happen. So I would look for it in March.
Okay. Well, Bill, I think that's about all the time we have. Thank you so much for joining us.
Thank you for your time and format here. Appreciate it. Appreciate everyone's interest.